Hey guys, how are you doing? Welcome to the Daily Factor. This is kind of a late Daily Factor show. I've been busy running errands tonight, and anyway, all right. How's everybody doing tonight? Probably not going to be anyone here. I guess there's three of you, but not a lot of people here, and that's fine. It's my fault for putting this off till so late. All right. Got some good news. I got another fund manager interview lined up. Remind me, and we'll talk about it whenever we get to that part of the show. All right. So let's check out the market. It looks like the Nasdaq bounced into the close and has gone straight sideways since the close. All right. Now let's look at the old S&P futures. S&P is kind of. Isn't that called a bear wedge or I forget what that one's called. Whatever. I say whatever too much. I need to quit doing that. I say whatever and I say anyway too much. Whenever I can't think of what else to say, I'll either say whatever or anyway. I need to try to stop that. Let's look at a little Bitcoin to see where Bitcoin's moving this time of night. Pretty much like the market, sold off, bounced, and gone sideways. I mean, we're pretty zoomed in on it, but it's just not, not super encouraging price action. The only thing bulls or it does look like there are supposed to be some buyers here. They showed up once or twice already. We'll see if they show up again tomorrow. Well, they showed up this afternoon. They showed up Monday or Sunday night. They showed up Friday evening. They showed up Saturday morning, actually. All right, so that's Bitcoin. Let's check out gold. Gold symbol is GD, same symbol as General Dynamics. Let's see, futures. Gold futures. Or no, it's not GD. It's GC. I always get that messed up. Okay, nice. Freaking nice. Plus 3% after a massive bounce. Gold's taken back half of its downdraft pretty much. Anyway, that's great. We'll take that. Hey, Vaughn, thanks for being here. Thank you so much for being here. Hey, remember, guys, while I'm thinking about it, not financial advice. Fun and entertainment only. All right, so let's check out silver futures. I hope they're also up 3% or more. Silver symbol is SI. There it is, silver futures, COMEX silver futures. Now they're up 4.87%. Heck yes. Now you can see silver's only recovered, a fourth of its pullback. That is ugly. But anyway, in any event, that's something else I say, but that sounds better than anyway or whatever. Okay, now let's get in the middle of the max factor. Oh, shoot. I just remembered. I forgot to. I haven't even checked this yet. I hope AI made it right. We'll see. All right. Daily factor. We have X marks the spot. So today I decided to do, sometimes we used to have Tesla Tuesdays and stuff. Tesla Tuesdays, whatever. I got bored on that. So I decided to do X, Y, and Z. We'll do X, Y, and Z tonight. How about that? There's some good X, Y, and Z symbols. As usual, we'll start with the high yield. And like I say, with the caveat, I have not checked this out. So there's no telling. Oh, here we have XBTY yielding 184%. Prices dropped from 1472 to 935. Man, AI is getting smarter. Look at this. They put this little new banner. That's really cool. I didn't even tell them to do that. I don't even know how they would know that's new, though. I don't. Anyway, all right. I'm not going to worry about AI right now. What even is XRPM? XRPM? Well, we'll get there when we get there. All right. So XBTY yields a bunch because the price is in the dumps. I mean, and it yields a bunch because it has high volatility. And I mean, it yields a bunch for two reasons, but it also yields a bunch because the price is in the dumps. XDTE. This thing, NAV's gone from 44 bucks to just over 40. That's about a 10%, or call it 8.54% drawdown. Try to zoom in a little bit so you guys can see that better. Well, I think that may be too zoomed in though. Excuse me. Gosh darn it. Hey, Chad, how you doing? In here like swimwear. And we got DGen 4 plays here. All right. So what the heck is XRP-M1? How did they what XRP-M? I mean, I do put new stuff in the Max Factor all the time, but how would AI know it? I mean, what's AI new since when? Now I don't like the zoom. I'm trying to unzoom, but the zoom is super clumsy on here. Gosh. Well, gosh darn it. Look, I'm trying to unzoom it here, but it's zoomed in on the, gosh darn, you got to be kidding me. I hate this freaking, there it is. All right, XRPM. At least has a reasonable yield at 35%. Been around since 11/18 of last year. Let's go see what the heck it is. XRPM. Oh, it's X Ripple. Okay, yeah, of course. XRP. I was thinking of, okay. Well, and this is new. I think I put this in the past few days, but that's really cool that Claude's on top of that. Good job, Claude. Good job, Claude. I'm looking down here at their holdings for this XRP. What do you think this Canary XRP ETF is? Common shares of beneficial interest. Is that just a growth ETF with XRP in it? I guess it is. Yeah, 100% XRP. Just an XRP fund. They got XRP and cash, but they don't actually have any cash right now. All right, back to the show. Where's the spot? All right, then we have XOMO. Now this thing's doing well lately. Price gone from 11.5 to 12.5. And it's paid a 30% yield, an annual rate of about 30%. And it was up 13% total return last year. If you look at this, I like to look at this. So you look at the 1 year total return, 13%, and you look at the yield. So on a 1 year basis, we can, you don't have enough total return. The total return didn't support the yield, so you could subtract the two. What's the difference between 13 and 29? Something like 16 or something, right? And so that is about your, give or take your total return, or well, no, give or take your NAV return. And sure enough, we can look at the 360-day NAV and went from 443 to 1268. So it's, down $2, and that's, you can, it explains it perfectly why it lost NAV, because it paid more than it made. Yield was 29, it made 13. Anyway, XYZY, this is based on Square, paying 25%. NAV on this sucks. It's gone from 41 to 30. Gosh darn, it's gone from 86 to 30. My Lord, on a 1 year basis. Wow. 1 year total return is negative 56. This is as bad as Murny. All right, well, XLEI. Now this is State Street Energy, right? Or gosh, I mean XLEI. What is XLEI? I'm drawing a blank. Yeah, State Street Energy Select Sector, Spider Premium, High Yield Covered Call Premium Income ETF, or something like that. It's actually the State Street Energy Select Sector Spider Premium Income ETF. It's looking good, though. It's looking good. All right, back to X marks the spot. Then we have XV. This is a buffer fund. We were talking about this today. I got an email from Mayor. He may be awake. It's probably morning where he's at. Anyway, I don't know if he's in here. Anyway, he sent me an email that is related to buffer funds. It doesn't have anything to do with XV, but it's a different buffer fund. You guys have probably heard of it. We'll talk about it in a while. Anyway, XPay. So this one is from Round Hill, does a good job. A lot of people like this. Yield's about 20%. NAV has gone from 55 to 54, so it's down 2%. No big deal. You can lose 2% NAV if you're going to pay 20%. You still have a positive total return. Sure enough, total return for the year last year was 12% positive. So you have a total return 12% positive, right? But you paid 19. What's the difference? 7. Okay, 7% negative. Well, it doesn't always work out perfect, but sure enough, we did have a little bit of a pullback. It was actually about 3%. So it depends on exactly how it gets there. But in the broad scheme of things, XLKI yielding 18.78%. NAV's gone from 26 to 25. This is based on XLKI, KI Health. No, that's VI. KI is Tech. This is the good one right here. I mean, maybe not lately, but I mean, I like Tech. Just making sure you guys are behaving. Yeah, it looks like you guys are being good. Thank you very much. I don't have to worry about you guys. Let's go back to X marks the spot. There's some good funds in here. Anyway, we have XLBI. I'm going to have to memorize what these funds are because it's too long to check all of them. Okay, BI is banking materials. I don't know how you building. I guess building is how I'm going to remember that. All right. Well, anyway, you can see this one's in the freaking dumps. Pays at 7.4% yield. I don't think that one's going to win. All right. BI is banking. RI is real estate, of course, right? XLRI. Some nights we do one time we did just a State Street. We just looked at all the State Street funds. No one really cares about the State Street fund. I was going to do that tonight, but then I thought, well, I'm going to do X, Y, and Z. Because Ys have some cool funds. I mean, and X's have some cool funds. And Z's, Z's only have one fund. I forget which one it is. All right. So RI is real estate from State Street, pays about an 8% yield. All right, then VI is health. I remember that because V for vitality. RI is real estate for real estate. BI is building, so it's actually materials. But I remember from building. YI is XLYI and UI. Let's look at XLYI. You know, if you stuck a gun to some guy's head and said you can only use State Street covered call funds, you could do worse. I mean, like if you had a brokerage that would only let you use State Street, well, you don't have a lot of yield, but they're all good funds, and you could probably slip around to different sectors of the economy pretty easy with these. Anyway, so this is consumer discretionary. Is YI, and I don't know how I'm going to remember it. Maybe like, why did I buy that? That's how I'm going to remember that. Well, why did I buy that? So that's consumer discretionary. All right, XLYI, and then XLUI is utilities. Is this one really yielding 15%? Well, let's see. Utilities are super safe, but I mean, went from 25 to 23, so dropped about 5% in quarterly NAV return. So good job, utilities. I bet utilities may be in a risk-off situation. You could, I'm not saying I would like to be limited to the State Street sector, but I'm saying if you were limited to that, you have a lot of choices from those funds. You know, like if you were limited to Round Hill or limited to YieldMax or Granite Shares, you're heavily invested in tech and AI, and so, you know, and heavily. But these right here pretty much cover all the sectors of the economy, and it's State Street, so it's kind of the grand old, you know, it's a you know, blue-blooded old firm. Now the only thing is that you don't get a lot of yield, but And just by looking at these charts, every single one of these has been going down, but a lot of them have been tracking assets that are going down. But have we seen one that's been really good yet? I mean, State Street Utilities. Anyway, that's utility. So let's go over here. XYLG. Okay, here's one I know. This is from Global X. These guys do at the money covered calls. They pay about 12%. It's been coming out to 13. NAV's gone from 29 to 27, down 4%. Yeah. Anyway, we have XLVI. VI, Vitality. That's health. VI is Vitality. That's health. And this one has been hot lately. It's gone from, this one actually has positive NAV. It's gone from 25 to 26. We have XLFI. FI is finance. That's banking, right? And then we have XLII and XLSI. Okay. FI is definitely, no doubt. I took the bait on BI for banking, but BI is materials. FI. Okay, so now we have II and SI. Any guesses? Let's see. XLII is XL State Street. Oh, industrial. II for industrial. So there's IB or there's BI is materials, and then there's II for industrial. So probably like John Deere and stuff like that. All right, and then there's SI, Staples. And YI was discretionary. Why did I buy that? Okay, I got it. I'll never forget them again. All right, so let's go see what else we have, and then we'll talk about which ones you guys want and which ones are y'all's favorite. Okay, it looks like we've introduced all of them. Let's talk about the. Let's see which one has some moxie. Well, the XRPM one, but that does it. There's an error on this one. Maybe that's why they knew it was new. Maybe they mean it's too new to put on the list because it doesn't have a 90-day price. That's probably it. That's good job. It was still a good job by AI to figure that out. Okay, so that one's not ready. It's not doesn't have 90 days yet. I don't think. Let's go look. If it does, I apologize, but like I say, it's already midnight, almost my time. I'm sure it's late your time. I just had a kind of a rough day. So it's amplified 3% or a rough night. All right. Oh yeah, that's what I was going to look at. I forgot I was going to look at. It hasn't been out a quarter yet. You can tell by looking at the days, or you can go to where it says performance quarter. Okay. So yes, this will be out soon. Don't think it's going to win. All right. So let's rank these by risk, or let's rank it by Moxie. Ranking them by Moxie, the darn XYLG, and this thing's probably going to. I mean, or let's rank it by NAV return. Or any of these do okay. We have XOMO. XOMO's got to be the winner. Best NAV return and best yield. Now let's look at it. Has good Moxie too, not the top Moxie, but let's look at the stable dex. Well, it's only a 69 on the stable dex. All right, well, let's just see what's number one. All right, so gosh. Let's look at the Quandex. Number one on the Quandex is XOMO, but that Quandex goes back a year. But you have a 1 year total return of 13% and it's paid a 29% yield. And the price went over a course of a year went from 14 and a half to 12 and a half. No big deal. That's definitely the winner over the course of a year. Over the course of 90 days, over the course of 90 days, it's saying, oh yeah, okay, of course. Short-term max factor, XOMO, okay. Yeah, and of course, because even over a smaller time frame, NAV's actually up 8 and you're yielding 29%. That's better than yielding 20% and NAV only up 6. It's better than old BI is what that's materials, of course, the material select, right? Of course, I know that. Then we have XLII. I've already forgot what II is. Is that II is consumer discretionary? II, gosh darn it, I've already forgot. Industrial. Then we have industrials right here. I mean, pretty much the only ones that are positive, it's the same theme. I mean, the tech is dead, I guess, or it has been lately. We have oil, we have energy. Well, we have Exxon, we have energy infrastructure, I think. We have basic materials or building materials or materials, raw material, whatever. Jackson, what's going on, buddy? What's the matter? All right, let me let Jackson out. What's going on, Jackson? Okay. I'll look at your cheat code in a second, Marcus. Anyway, but it's the non-flashy things that are getting the job done. So XYLD is, I mean, a super boring fund, super safe, but unlike some of the more exciting ones, it's actually lately has been maintaining its NAV. Now, in a runaway bull market, the more exciting ones will spank it. But other than that, we have health, industrial, materials, energy infrastructure, and Exxon. So I think we see the theme. All right, guys. Well, let's talk. Let me go through the questions and see what's going on. We got Z Bikerman here. We got Marcus in the house. It's late on the East Coast. Nothing but green today with metals and miners. Let me find my glasses. I'm sorry, DJan. At least this is easier to see than the spreadsheets. I mean, I've been telling AI to make it colorful, and I'll work on the. I'll work on some stuff. I got you. All right, Chad. And you're 34. This wasn't the great. Okay, this wasn't the greatest daily factor show. Basically, the theme of the show is it's all about materials and stuff that's not fun. Tom Lee's going to start combing his hair soon. Why? Because he's doing bad or something, or he's ashamed of himself. I mean, all right, EDGU. So Marcus is saying he has the cheat code. Let's see. I mean, it's not any better than my LQDA is. The LQDA that I found today, that I told you guys about 6 months ago. Don't you guys remember that? I said, buy LQDA, buy EDGU. All right, so 3Edge Dynamic US Equity ETF. Cool. Okay, well, let's go to the website. Obviously, the graph is good. And I'm going to talk of, is Mayor here? I don't see Mayor here. But anyway, I'm going to talk about a hedged equity fund too in a second. All right. And then I'll tell you about the manager that's coming on for a show soon. All right. Fund objective, tactical U.S. equity exposure that seeks capital appreciation in rising markets while limiting losses during periods of decline. Okay. Seeks to achieve its objective. Dynamic equity exposure includes U.S. equity exposure to market capitalization, large, mid, small sector and subsector industry exposure, and style, value/growth. Selection begins with our model research and is finalized by the investment committee to allocate to exposures which appear undervalued and are poised to respond favorably to a financial market catalyst. All right. Is there any options going on in here? And let's just look real quick. It doesn't have to be. I'm just okay. And they have other funds too. Okay, so they have dynamic fixed income, hard asset, okay, Edge H is hard assets, and then they have Edge I, which is dynamic, yeah. And then they have Edge U, which is what we're looking at now, right? All right, I just want to see if there's any options really quick. Just let me look at the strategy. Oh yeah, they absolutely use options or some kind of derivative. They're talking about defined outcome exposures, so callers. Defined outcome exposure means you're selling off upside to buy some downside protection or something like that, some variation of that. It says they're typically defined outcome exposures are typically provided through an exchange traded fund ETF structure to deliver a specified upside potential, i.e., how far out they sell the call, and a downside exposure over a specific period of time, i.e., when it expires, when the options expire. That's cool. So it's a caller fund. The advisor focuses his research primarily on sector selection by carefully reviewing. So it's a caller fund, but they aren't trying to pay you a yield. So I mean, so it's good if you don't need a yield, and it looks like they've been doing a good job. The fund will sell or reduce exposure to a security when it achieves its target price and or the advisor's model finds the security overvalued. Huh. Interesting. Okay, yeah, that's a good one. Let's go back to this. All right, Marcus, you did good tonight, or you do good every night. So how this thing dropped from 25 to the worst. 21 and a half, so 22 and a half, 23 and a half, so 3.5 points on 25, about 1/8, not too bad, 12%. Not too bad at all. A little bit less than the S&P and a lot less than the NASDAQ, but the important, look how fast it recovered its price. Here, April and May, got above it and stayed above it. They probably don't get a lot of upside, though. I mean, I'm not saying anything bad about him, but I mean, the NAV's gone from 24 to 29 over a year. I mean, so we go back to last March 24th. It's not quite a year, but it's actually probably a little bit higher there. Was 4 points on 25. I mean, you know, it's not going to have. Okay, well, let's look at it this way. I'll try to show a way to illustrate this point. Gosh darn it! I hate when I. Okay, calculator. So let's see. EDGU, and let's run it up against something like SPY-A or something, right, Marcus? You like SPY-A too, right? Oh, see, yeah. No yield to pay 15 cents. That's fine. SPY-A pays 10 cents. It's just their growth funds. Let's do a different comparison. Let's compare it to just SPY-I. SPY-I beats it by a little bit, but what did I say? They're selling off upside, right? You can see it appeared to get a little bit less downside. And you remember it was down like 12%, and I said it's barely down less than the SPY because I think it was down like 15. I said, but it's down quite a bit less than the NASDAQ, which I think was down 17 or 20 or something. But anyway, I think this is an S&P based fund. Let's go look back. Let's go back over here to the top 10 holdings. See what they have. Oh yeah, they're using the State Street. They're doing the exact same thing I just said. I said if a person had to just use one family, you could probably do it with, you know, the State Street, all the sectors, and that's exactly what they've done. They've just allocated. Their main one is tech. They're 19 in tech. Then they have this American Century. Which is a small cap value, so 15% is small cap. 11. This is a good fund. 11. I like this. 11% in financial, and not covered calls, just the XLF. But and then the XLC communication, XLY. So why did I buy that? Consumer discretionary. Anyway, yeah, I like this. So it looks like they're overweight or they're waiting in tech. They have tech and small cap. The small cap's been on fire lately. Are there anything? And then they also have communications and financial. Those are their positions that are bigger than 10%. So financial, communications, and then they have small caps, and they have been about twice as much tech as they have the financial and communications. Anyway, yeah, we'll keep an eye on that one. How long's that been out? It's just because it doesn't have options, but that's a good one. Okay, Mayor, our friend Mayor from the comment, he's in our comment section all the time. I don't think he's in our Discord. He sent me, he wanted me to check out something, so he sent me an email, and I've checked this fund out before, but let's check it out again. KSPI. Have you guys heard of that one? Now, KSPI, Marcus. All right, Marcus, I tell you what, I'll trade your EDGU. I'll give you can have EDGU. Now, a new fund I like, the best fund out there actually is KSPI, Marcus. But I can't believe you haven't discovered KSPI yet. Come on, Marcus, you're falling down on the job. And KSPI pays a yield. Look at this. It's a yield fund, and it's spanking the heck out of EDGU, which is a great fund. I mean, I'm not knocking EDGU. I like the idea of it, but heck yeah. No, I know it. I got you. And I actually like EDGU. EDGU is a good-looking fund. Does X Funds have the best website visually? It is a pretty cool one, with the old-timey pictures. Yeah, I mean, yeah. That, or what are you saying, THTA, or that that is honestly not bad, just came out in 2024. Yeah, doing great. Yeah, RIP, Marcus. Have you never seen T-SPY? I mean, K-SPY, just looking at these, and they're both kind of hedged equity, or I wouldn't really call it EDGU hedged equity, but it's just a growth fund. So, I mean, it's fine. We would expect K-SPY to go down a little bit less because it's a hedged equity situation. Hang on a second. So, anyway, but yeah, that K-SPY. I found K-SPY like 2 months ago. I think Mayor sent me another email a month and a half ago, or somebody else maybe. Could have been Mayor. Told me to check out K-SPY. It's on my to-do list. I even think I looked up a bunch of information on it, and I loved it. I'm trying to think what the catch was. It's not just a normal ETF. It's a hedged equity. Oh, yes, I know what it is. Oh, I love it. Okay, I'm just going to have to do content on it. I remember exactly what it is. It's they combine an ETF or a covered call strategy with technical analysis. So based on what the technicals are doing, sometimes they will go super far out of the money, or sometimes they will go right at the money. Sometimes they will be halfway uncovered. They have a strategy to lean their covered call strategy bullish or conservative based on a technical, index that's published live, and it's open source, and you can see it. It's I think it's issued by Crane Shares, but it's that guy named he has a YouTube channel. He's a hedge fund guy. His name is Hedge Eye, and he's kind of a redhead guy, probably about 40. Smart guy. I think he has about 300,000 subs. But anyway, yeah, I mean, I know it. I was thinking, so I think that's what ETF generally means, sort of long put spread line. But it could also mean, where you a put spread caller. I mean, it depends on if it's defined risk, a floor, or whatever. But yeah, absolutely. So, and I bet K-SPY does that. That's what K-SPY does. Depending on the, gosh, I'm going to have to show you the darn thing because I can't describe it well enough. Jax, what's going on, buddy? What are you doing? How are you doing there, buddy? Are you all right? What's going on there? He's trying to get my attention. I'm going to go here in a second. I just want to, but I'll do a full thing on this. Go look at this. This is cool. They definitely use hedges. I was just going to show you the mechanism. do they have a KWeb? There it is. Well, it's the Hedgeye, and his name, I'm trying to blank on his name. He's a kind of a famous Wall Street guy. He does, anyway, Hedgeye risk range signals, which on a daily basis, and these are published, you can see where it is, may buy and sell options produced using Hedgeye's price volatility model. They've been doing these signals since 2015, and they show you the, they have the methodology in the white paper in here too, and they haven't, anyway, gosh darn it, where's the darn white paper? Well, I'll do content on it. Anyway, but basically, if the market's oversold, they go far out. They play for a bounce, and if the market's overbought, they use a collar. That's the thing. So they don't always. If the market's, that's what it is. Sometimes they're straight. Sorry. They vary what they do. Sometimes they don't even buy protection. Sometimes they just do a, gosh darn it, why can I not find this? This is frustrating the heck out of me. View all ETFs. All right, where in the heck is KSPI? All right, buy now, fact sheet, fund document, presentation. That's what it is, the presentation. Or maybe it's on the fact sheet. Yeah, I think this is the slide deck. Hopefully this will have it. We'll wait for it to load. Yeah, kind of red hair, no hair, just red head. Yeah, nice guy. His name's Keith. Keith from Hedgeye, Keith McCullough. See, it comes across like a nice guy. Okay. Now, I love this kind of stuff. I should see if I can get him on the show. I mean, so it's okay. So this is the S&P's performance, but they have something called the risk range signal. So the risk range is just an index, and they have a chart somewhere. Yeah. Okay. They have a chart somewhere that shows an overlay of the risk range on top of the SPY. But whenever the SPY, sorry about the scrolling. Okay. Whenever the SPY is above risk range, KSPY will sell a call, and that cap's upside. But remember, they already think it's a little bit too valuable because it's above their risk range. It's overvalued, and they're all right. Whenever the S&P 500 is below the risk range, no call sold, uncapped. But they have a constant downside hedge, so it's the call they're taking off. I thought it was the put. KSPY is always long the put to reduce volatility. However, when the S&P is below or within the risk range, KSPY will do a put spread. They'll sell a further out of the money put to fund the downside hedge. So they'll be, so when it's above the risk range, they sell calls, and they just have a put, and that's good, a straight put. They don't have a put spread. A put's more defensive than a straight put. So when it's above the risk range, it may crater, right? It's overvalued. They have solid downside protection. They sold their upside protection to pay for it. Whenever the market drops, eventually it drops, and then it's below the risk range signal, or even within the risk range signal, then they put their put to a put spread because it's already dropped pretty low. We don't need all that extra protection. We'll slip it into a put spread, and we won't even use a call, right? When it's below the cap, they don't even use a call. Then when I don't know what they do when it's within the risk. Anyway, but yeah, when it's above it, so I love this. I can't tell how much I love this. I cannot believe I haven't made content on this. I fell in love with this, and I totally forgot about it. It was during that month that I took off. So, and you can see right here, you can see their strategy. So right now, they publish the risk range, so you can know what they're doing and know if they're, at any given time. I just can't. I don't know where it is. Maybe it's on the next thing. So right now what they're doing is they have put spreads on because it's below the risk range. After this big pullback, you bet your butt it's below the risk range. So they sold the 66.95s. They bought the 68.05s. So for January 9th, so that's the end of this week, right? Or, well, it's Monday. For Monday, and they've sold the 6.9. They're short the 691 call right now. So they're short on the SPY, but then they're buying puts on the SPXW. But anyway, these guys are pros. They know how to do all this. I would just think you'd use all SPX if you were a fund or something. But okay, well, let's see. Okay, so whatever. How's the performance? Anyone could come up with the fancy, whatever. So. So SPY still beats it. KSPY, if you notice in the most recent pullback, KSPY didn't go down near as much as SPY. KSPY is definitely hedged, but giving up a little upside. Let's check the dividend though, because remember KSPY didn't pay a huge dividend, so it's 211. Let's go a year to figure this out exactly. I think we only have to do this. It pays 5 or 6% at the most, which is good. But SPY pays 12% and does a little better on NAV. Why is that? Well, SPY is not having to finance a put spread. In a big risk-off move, SPY is going to be in trouble in case SPY is not. We really haven't had a big risk-off move. The biggest down move we've had was April, 20%, 18% on the NASDAQ or something. But I'm saying in a bigger risk-off move than that, you might be glad you have KSPY. But of course, it makes sense that SPY should have a little bit more upside because they're SPY selling calls also, but they aren't financing puts. All right. So did you guys like that little presentation? Okay, Charles, if you're looking to hedge equity stocks look into the Foxy currency stuff. Yeah. I don't know if I want to get into Foxy this late. But simplified currency strategy, we'll talk about that some other time. Also, because I have no idea what it is. If you want to, I'm not a Forex guy. I understand what the concept of Forex or currency crosses, but it's not my deal in life. It looks like it's a long short currency thing, though. Yeah, I mean, I'm sure this would. It looks like it might work for a hedge, and it pays about a 5.96%. It looks very similar to KSPY, really. I mean, it, kind of gradually goes up and to the right. It didn't go down that much in the pullback. It dropped 10%. Good call there. Good call there. Ooh, Foxy lady. Foxy lady. All right. Stix. What is Stix? Is Stix an ETF or a band? Okay, help me out. Add the dividend payment for your tickers, weekly, monthly, quarterly, please. Help me out, y'all. Add the dividend payment. What are you? I don't get it. Okay. Also, don't forget about YQQQ. I have some of that. And that's another option. That's another option. I also like the idea of chaos, CAOS, and I like the idea of ATTR. Not advice, but I mean, those are other ones I'll look into. TOAK. You could use something like TOAK or BOXX, with a really risky allocation, if you want to mellow it out. Which one's title? Oh, Stix is title. Are you serious? No, you said just kidding. Okay. Most people never want to sell covered calls long stock for tax reasons. Let's see. SPY A, SPY I, and TSYX, full SPX coverage for any situation. Oh, yeah. So which situation? So for a bear market, you might use SPY A. For in between, you use SPY-I, and for a runaway bull market or risk on, get you some TSYX, right? Is that what you're thinking? You're going heavy on sticks in the morning. Should have done that today, bro. Was a declaration day. Sticks held up nothing. All right, I'm going to have to punch in sticks. What the heck is sticks? Why crud? Why crud? Don't worry though. Honestly, like 2 days after div seems to be sweet spot. Oh, do you mean to buy? You wait for a day or 2 days after the div and then buy? All right, Charles. If bullish long term, try to buy a small chunk every 2 weeks add 5% volume. If market sells off in a panic, yeah. So you just do a systematic deal. You add a certain amount every 2 weeks. Every payday, buy $200 or whatever, $500. It doesn't matter. Then you buy 550. You know, if the markets are down, you buy 550 and the markets are under the 200-day moving average. So in 2022, you would have been spent or whatever. You add a little bit to it. You add, yeah. I like that idea. It's kind of the same idea that hedge eye thing guy's trying to do. You know, I mean, and I like the idea if markets way down, don't even sell any calls, let it bounce. Now, but I mean, on the other hand, that's why it only pays probably a 5% yield too. I mean, the selling calls produces the income. So, but I mean, you saw that thing had pretty good upside performance. So you can have one or the other, I guess. All right. So you just check thinking you'd be. I don't get that. Silver shot back up today big. Glad I didn't sell Friday. Me too. Well, somebody told me, somebody smarter than me, and I heard it from multiple people, and I heard it from people on Twitter. I think it may have been one of you guys in here or something. But AI data centers, the world still needs silver. That sell-off was related to margin, and you know. Things not necessarily related to supply and demand. So even if I want to get out, we should all. I mean, in my mind, I'm going to wait for a bounce. Even if I decide I don't want the position anymore, I'm going to wait for a bounce. And I think I do because it's not that much of a percentage. I didn't buy a big enough percentage to really be able to lock it in. So, oh, TSYX, I got you. Yeah, heck yeah, TSYX, I got you. I just don't need leverage. I mean, if I'm going to watch it, it may be the greatest thing ever. It may be the greatest thing ever, but I think there's so many funds that are. I'm just going to stick with my lightning strategy. But I do need to add some case buy because I've made a resolution this year. I'm trying to allocate to all unlimited upside, and I know I still have some ULTY. It's fine because I've sold most of it. I'll probably just hang on to a portion of it. But I mean, I'm trying to the extent I'm able, put unlimited or uncapped type upside situations on there. So I have QLDY, I have K yield. Howard, I'm not calling Howard's cap because he doesn't mechanically sell call. Sometimes he's just long stock. Sometimes he buys options. So I'm not calling K yield capped, but the ones that are truly uncapped are blocks in QLDY. I can add some case buy, and I need to because it's uncapped it's uncapped when it matters. And it has great upside performance. And there's some other ones too. I mean, and of course I have ISSB, and I have a little MAGO and a little MEMY, and yeah, they've been getting killed. But in a bull market, I'm going to be dominating. But then I also have some ATTR, I also have some YQQQ, and I also have just a little bit of salty. I have about 10 or 12% or 15% YQQQ, 5% salty, so about 20% in inverses, then another 10% in ATTR. So it's a total allocation of like 22% of 30 or 32% in inverses. So I'm 70-30. I'm on my own long short fund. All right. ATTR is sort of your all-in-one option. Yeah. Poor Max already forgot what we said to you. Oh, I know it. I remember now. SBAR pace is 14% total return. Yeah, I mean, SBAR is doing a great job. Barrier funds are the new, yeah. SBAR, another thing I learned from the show. I'm glad. I'm glad. I wish you would have learned it from me and not the, no, I'm just joking. I am glad you learned it any way you can. But yeah, Marcus and Charles and a lot of you guys are just maybe not Chad, but a lot of you guys are just a wealth of information. I'm just joking, Chad. Does X funds? I think, okay, now I know what you're. Oh yeah, we were talking about X funds. I think. I think. I know this. You know, who used to have the best site is Global X, but they done some changes to it. But they used to have on here. I know it's not much to look at, but they had some of the best research. But they took it down. But it showed you every fund they had, and they went back to 2012 on XYLD and QYLD, 2013, I think. Every fund they had, how much premium the fund captured every month, the fund's cover call, and how much they paid out. So it would show, or I'm sorry, it did show capture. All it would show is, it did show capture because that's right. It did show capture. So you might, and I figured out their formula. If they made less than 20%, they paid about half. And actually look, check this out. Anyway, but I would have never known that. Most of the Global X is used to be, and other people say this too. Rod used to say, or other influencers say this, but Global X has a really, they were really good about publishing all their data. So what I was trying to show you is, let's go weekly, and let's go back in time. Let's go in the Wayback Machine. This one is XYLD. Yeah, XYLD won them, or was second place in the Max Factor. I didn't. This one has been doing well lately. Of course, this is dividends turned on. Of course, not adjusted for dividends. The NAV is flat. Went from 39 to 40. So that one just cleared. You know, pretty much just got to take home your yield by the end of the year. I mean, XYLD is doing good. Okay, what I was trying to show you is you can go back to you can go back to when volatility was much lower. 20, like 15 and 16. Anyway, and when you look at the dividend payments back then, the dividend payments don't go back that far. But on their site, they showed every payment. They were paying, and their funds that usually pay 12% were only clearing like 15, 16% and paying like 7.5 or 8%. And then there are funds that pay half, that only sell options on half, were paying like 4%. But then as volatility came back in the market into 2019, 2020, 2021, then they've gone up to paying 12%. But they did used to always pay 12%. Anyway, they have, that is in here somewhere in their research. They have their insights, articles, videos. They used to call it, well, anyway, I just need to find it. I need to have AI go look for it, but it's amazing because you could, it's just a great source for researching covered call funds. But visually, yes, you did say visually. So I'll be with you on that. So let's see what you guys are talking about. Oh no, it's not coming out till spring. Oh, guess who's coming back on the show is, I think I messed up something. But I've been kind of burning the candle at both ends lately. I'm trying to think. Evidently, I did right towards the end of the month. I put out like a bunch of videos just trying to get something out to get over the minimum. Anyway, but I put out it. But I'm not that I wasn't really interested. I'm really fascinated with the Quantify funds, ISSB, ISPG. I put out something showing their positions and I kind of how they work and or how I think they work, and I did some, and I put him in option strat and showed some stuff. Anyway, David, the manager, texted me and said, "Oh, I love your thing, but I got the idea." He really didn't love it though. He said, I love your position report on ISVG and IS whatever your symbols are, but I'd like to maybe I could come back on and maybe like clarify some stuff for you or something." Anyway, and I said, absolutely. I said, if I messed something up, misrepresented something that wasn't on purpose, I'm so sorry. But yes, I told him to come back on anytime. So I'm going to have him on whenever he gets back to me. And so anyway, we have any questions for him. I'm going to let him do the talking this time. But if there's any questions you want me to ask him, put it in the Discord where we go to Discord. Anyway, I think I might record it too. I think that's why I need your questions. I think I'm just going to ask him the questions and maybe pre-recorded and try to put out a pre-recorded video. His last video only got like 100 views or something. I mean, it's the worst. It's the worst live stream I've ever done. I think that's maybe why he's upset too. Then he went on somebody else's show after mine, and of course he got 4,000 views or whatever because the other person didn't take a month off. I mean, if he would have been on with me back in November, we would have got 1,500 views or something. But it was embarrassing. So it was super embarrassing. So anyway, but I think if I do a pre-recorded, I'm going to maybe get him some more views. I just feel bad about that. I really like those guys too. I mean, of course, because they're option bros, especially that Zed or that, or it's in the live. Okay. Especially that Zed, what's his name? Zed, or what's his name? Zed or Ned? His name was Zed Francis. And I've seen other content from him. I've seen him on the internet other times. Yeah, 282 views. That's embarrassing. I mean, that's like an all-time low. I mean, it did get 100% likes. I mean, everyone liked it, but I mean, my gosh. I did the same thing last year. I've just killed the station. They talk about how this is the new grind. Like driving Uber, everyone thought it was such a good deal, but then it's really just a grind, and you don't really make that. You think you make a lot, but then when you figure out the wear and tear on your car, you don't. No, or that's what I've heard anyway. I've never done it. But then I read an article the other day saying that this is the latest gig work, the YouTube influencer. YouTube is using people like me or whatever that like to talk or whatever. People that. But anyway, it's this is a new grind because I literally work 10, 12 hours a day, and the most I've ever made is 500 in a month. It's a good thing I don't need the money though, but it'd be nice to make some more money. Barbell approach: keep your high yielders low and preserve growth and alts in defense. Yeah, definitely going to try that approach. I agree. You're hoping I would say what? Oh, okay. No, Charles is saying you have to be rich enough to invest in SBAR to withdraw 1% a month for living expenses. So 1% a month is 12% a year. Yeah. So yeah, 12%. Well, so 12% a year is, it's better than the 4% rule. It's 120,000 on $1 million. On $500,000, it's 60. Yeah, but it'd be better to have 2 million or $1.5 million. DJN, most don't keep pace with overall markets regardless. Okay, what are you guys talking about? I need to make sure you aren't guys giving bad advice over here. I'm going to have to get into all this. ATTR, does it do monthly? I think it's quarterly, or I think it doesn't even have one. It either doesn't have one or it's quarterly. That's not the deal with ATTR. That's not why you want it. That's not why I got it. I got it because Marcus made me. I was going to get chaos, but I just didn't want to not listen to Marcus and then him be right again. And because he's smart. Marcus is definitely smart. But we'll see. Well, I'm going to be mad if chaos beats it. I mean, if we, you get too early to tell, but if we go, 6 months or something and chaos is spanking it, but then I have something to rub it in, and then I have something to talk about. I can make content on that. And, but yeah, looks so far so good, Marcus. Good call there. Good call there. Check your broker. SBAR, some offer 30% maintenance margin. That's the only issue. A lot of the option income ETFs have rough time. Oh, yeah. Yeah. Okay. And that's what you were answering. And then Charles said, DGen, most don't keep pace with the overall market, and many get killed in a big soft regardless. Absolutely. Absolutely. So, but yeah, but the cool thing is that was just the introduction. The cover calls were the tip of the iceberg for option trading strategies. That's how I got into it, because like I always say, it's the only thing you could used to really do in the old days. Or you could write a cash secure, but do multi-leg strategies, especially just think before you had live quotes and before you could put orders in yourself. You're on the phone calling someone, and so back in the day, covered calls about all you could do, because that's pretty easy. You call someone up, okay, yeah, I'm looking at the 30. What's it going? Put a limit in for 3.5. Good for today only. Perfect. So that's where the fund manager started, because it's what everyone's familiar with. We went from the covered call to they didn't used to have, they've always had hedged equity funds, but we went to the covered call to then a hedged equity covered call where they're selling calls, paying you a yield and hedging it, and then we went to barriers, auto callables, and those are huge. And then, and also around the same time, some managers started uncapping the upside, and the downside. But so we've come a long way, you don't, and I was never, I call my station the covered caller because I was trying to copy off of the daily caller. And I love the idea of covered calls, but more than that, I just like the idea of any type of derivative, leverage, math. I love options because of the math element. Max, digging under the sheets. Barbell approach. Hell yeah. Definitely got to try that approach. Okay, ATR equals chaos plus box spreads. Yeah, that's what else convinced me, Marcus. You said, heck, ATR has chaos. And actually, I noticed that too before you even said that. But you reminded me. You said it has chaos, and anyway. But chaos, I think chaos itself obviously has puts and box spreads. I mean, I think those are also in chaos. But anyway, if that can't stop a black swan, nothing can except inverses, I guess. Yeah, full port white and white triple Q. That's not really the best black swan protection because it's capped upside on the downside. I mean, I would say your chaos or ATTR for black swans. White triple Q maybe I don't know on white triple Q. I love the idea of it at first, but I'm not as high on it as I once was. And now that there's other options out there like ATTR, at some point I might start using something else other than that. At the time, like I always say, in March when I knew the market was going to crater, chaos was around, but I didn't do that. So I put in white triple Q, and it worked well in that circumstance. But then just kind of leaving it on, it is a bleeding. I mean, I don't know for just leaving it on if it's the best thing, but at the time it was the best option. I would imagine in the future I might be 70-30 option strategies and then 30 chaos ATR, something, or no, probably no at some point. Maybe some no and some ATTR, whatever. And I really, it's too late for now, but I really wouldn't mind some crypto insurance. I'd really like to get that, the X funds that's going to be the crypto. And I don't know exactly how they're going to do the downside protection, but I'm interested in checking that one out. That's going to give you black swan crypto protection from X funds. Now, it's too bad they didn't have it out because it would probably pair really well with blocks. A barbell approach, a little 50-50 with, it probably probably be pretty good. Okay, Mark is saying Chaos primarily utilizes systematic put spreads to provide cash protection, while ATTR integrates the buy. That's right. That's the difference. And I remember that. Yeah, they both are protecting the downside, but ATTR has an additional strategy where occasionally they will just buy the market, and they'll use calls too. I know. I actually read the. I actually have content on that too, in an AI Google notebook. I have a large language model with a bunch of stuff. Anyway, that's all in there. But yeah, that's so. But so this one, I wonder what their buy the dip strategy is. I wonder if it's probably say mechanical, like anytime it's down 5%, or they probably have a moving average or something. Anyway, maybe we could get the ATTR guys to come on. I would love to talk to those guys. Somebody tell me who those guys are. I don't know them. Anyway, we need to I'll contact them. Was an X fund supposed to come out with weapon? Yes. And at the same time, they have something in there that's a bearish Bitcoin fund. Probably too late for now. Bitcoin's probably at the bottom, hopefully. But I'm saying, I hope. But they have some kind of Bitcoin option thing. Y'all look them up. They need more publicity. Yeah, they do. I mean, I'd like to have ATTR guys on here. I'm trying to get this station going again. I'm trying to have one person on a week. I've contacted YieldMax to try to get them scheduled soon. And we had somebody last week and somebody the week before that. We get YieldMax soon. And we have David from Quantify soon. That's going to be 4 managers in the course of a month. And then, so for next month, maybe let's line up some, ATTR. That'd be fine. Oh gosh, and other things, we might need some protection tomorrow. We have big tech earnings tomorrow, don't we? All right, it's going to be a big day tomorrow. I'm going to get out of here. Let's check the market one more time. But barring the market is, NASDAQ is, oh, that's a weekly chart, but that's not a good look. Are you serious? Boy, that is an ugly weekly bar. Oh, that's not it. Okay. I was going to say, are you serious? What the heck? That weekly bar is not ugly. This is a barcode pattern. No, there's no discernible trend. No discernible trend at all. Anyway, all right. Big day tomorrow. Market's fine. It's flat. Bitcoin futures are, that's a weekly chart, thank God. But that's an ugly bar. Look at that gap on the weekly chart. You got to be kidding me. It's pretty hard to get a weekly chart in crypto because they trade all weekend. But this is Chicago futures, so they don't trade weekend. But that'd be a good place to sell the rip, possibly. When we get up to 81, there's probably I bet there's a sell-off. I bet there's a sell-off the first time we hit here. If there isn't, it's good news for the bulls. All right, guys. Well, thank you so much. We'll get back in the morning and we'll get on top of this and see how those earnings come out. Maybe we'll even do an aftermarket earnings show or something, because it's going to be a big deal. These things could crater the whole market. I need to put on some more protection tomorrow. I think I'm going to put on one of those reverse calendars in real life. We'll talk about it. I'll show you in the morning what I'm thinking about doing. I've been looking at it. All right, guys. Thank you so much. Have a good day. Oh, remember, this is not financial advice. Consult a professional planner who knows your personal financial needs. If you'd like to support the station, paypal.me/Max Convexity is the way to do that. You can also like, subscribe, leave a comment, or whatever else. Thank you so much, William. Thank you, Chad. Thank you, Marcus. You guys have a good night. I'll talk to you later.